Hello, everybody. Good morning, good day, good evening, wherever you are in the world. This is Lenny Murphy with Greenbook, and welcome to the second of our GRIT Sneak Peek webinars. Today, we're going to be talking about a lot of the other content we didn't cover in the first one. So if you missed the first one, then you can either email us and we can send you a link to that, or wait till Tuesday when the GRIT publication comes out and catch up there. So I am joined by an illustrious panel of experts, and we'll introduce them in just a minute. First couple housekeeping things. We're going to last for 1 hour. If you have questions, submit it in the Q&A chat box, and we will try and build those in as we go. You're on mute, and you will get a link to the recording for this webinar within the next week or so. So I'm joined today first by Leslie Albright, Vice President of Market Research at Confirmit. Hello, Leslie.
Hi there. Hello, everyone.
John McGarr, the President of Fresh Squeezed Ideas. Hi, John.
Good day. Hello, everybody.
And Pat Pellegrini, Dr. Pat Pellegrini, I should say, President and Chief Research Officer at Simmons Research. Hey, Pat.
Hi. Thank you. Great to be here.
All right. So we are going to dive right in. We have talked about some of this previously, so we do have a point of view. If you're having a problem with seeing the slides, some are a little dense, then you should be able to full screen your screen to be able to look at it better. But in the meantime, we'll try and talk through it. So in this wave of GRIT, once a year we ask about the usage of what we term traditional methodologies, both quant and qual. And this is the question around traditional quant. And the way we did this is we asked folks to rank their usage of these methods overall. So what you're looking at is a chart that shows their ranking of 1 through 5 of each of these methods. And you can kind of follow it, if you're looking at it, follow it crosswise, and that's probably the best way to think about it. No surprise, online surveys, 69%, the dominant model. What is a surprise is mobile surveys coming up number 2 at 40% as a distinct methodology from online. Katie at 24, CAPI, which is device-driven face-to-face at 21, and then the rest kind of coming in lower down across the board. So panel, particularly, Leslie, let's start with you, actually. What are your thoughts on online, which should be good news for Confirmit, particularly, though, the mobile now popping up to the number 2 method? What do you think about that?
Yeah, I mean, not a surprise, right? I mean, MR companies have been talking about mobile for a long time. So certainly not a surprise there. I think one of the things that we hear from a lot of the MR companies out there in the industry is just, we have all of these different ways of collecting data, right? Whether it's online, mobile, or Katie. But how do we bring it all together into a kind of one central place? We continue to, obviously invest in all of these different data collection areas, and online and mobile, I think to us is not a big surprise. And the same goes for Katie. I think people in the industry have been talking for a long time about, is Katie dying? Is it continuing to be an important method of data collection out there? And it's certainly an area that we continue to see being used, and we continue to invest in that area as well.
But my concern is around the Katie, that's why it was surprising, is thinking about the results of the election polling, which was predominantly done via telephone. And, the misses there, and the challenges involved primarily with cord cutters and mobile first, et cetera. Is Katie going to continue to decline solely because it just isn't effective as a methodology from a sampling standpoint and doesn't deliver necessarily the best data? John, Pat, what do you guys think about that?
Well, from my point of view, I mean, all of these methods, those top 3 in particular, they all are used and they do work for certain portions of the population. for me, it basically says if you're doing any kind of survey work, it's going to need to be optimized for each of those, which then has implications on expectations, what you can actually get versus what you can't get. They're obviously not all exactly the same. But from if you're trying to execute some programs where national representation really matters, like an election, you better have all three bases covered. That should be just regular behavior.
Yeah, this is Pat. I would tend to agree. In the Simmons case, of course, we have a model where we go after the creation of a high-quality, nationally representative survey, the National Consumer Study, and then we do a lot of custom work that's heavily linked to that, which is a great model because it helps us bring in other databases and add value to them, integrate them, merge them, etc. Not everybody has that luxury where they've invested in a expensive methodology, but with cost reduced through syndication. So if you don't have that a luxury to have a database like that, then you need to make sure that you're using multi-mode design. And we do that anyways, and so a lot of investment has to be paid into the mode of data collection so that you are representative. I wasn't surprised to see mobile there, and I wasn't surprised to see Katie there as well. It's interesting, too, that you have to be careful with online and mobile, is that you, as was pointed out, while they're heavily relied on, not necessarily the most representative samples if not used in a multimode way or knowing exactly what you want out of your survey. If it has to be nationally representative, we need to be careful. These are heavily used methods and not always reliable in terms of the outcomes.
Yep. Leslie, on the are you seeing a greater reliance for multimode for your customers, where they're running running Katie and online and mobile together simultaneously, or one versus the other?
I mean, I would say that we still see a lot of data silos, within the industry, and of course, our technology is about bringing all of that together, right? Regardless of what mode your data is coming in through, can you work with it? Can you make sure that your organization is spending time not just bringing the data together, but actually delivering insights and having, the ability to then put your time into analysis and strategy and delivering actionable results. So I would say, sure.
So I don't have the data right in front of me, so I'm going by memory, but when we did this last year, if I recall correctly, online as a distinct method, and it had been this way for years, was roughly 88%, and mobile was far down. For mobile to make this type of jump as a distinct method tells me that there's some cannibalism, and the decline online is that now we are seeing a shift where that we are thinking about them as different things, and mobile is beginning to cannibalize online overall in terms of its share of methodology and share of project. Do you guys think that's accurate from what you're seeing and hearing yourselves?
I don't know.
Yeah, I would say absolutely.
Yeah, I was going to say I don't know if there's necessarily cannibalization as much as there's dual use. Yeah.
Probably a better way to think about it, John. You're right. The gist is that people now are, this tells me is that they're shifting to a mobile-first mindset and adapting that way rather than thinking about mobile as simply a form factor for online, which I think has been the dominant thought process for the last few years.
Yeah, indeed.
Yeah. Okay. All right. Well, we've got some other stuff to cover, so let's shift gears and think about Qual. So I didn't have a chance to adapt this this chart as I had hoped to our moderators, to the folks that are watching. Same thing. We approached the question the same way as we did previously for folks to rank their usage. Because of the platform that we use, it was broken into two questions. So what you're seeing is that's why there's 1 through 9, and then it starts over again in 1 through 7. In a perfect world, we would have merged those so it would be more sequential. but we didn't have a chance to do that before this webinar. So now all of my mea culpa is out of the way. Again, in-person focus groups, obviously number one, any way you look at it, followed by in-person IDIs, strong number two, no matter what, and then a decline as we go forward from there, except for communities, which I would consider to be number three at 21%. The surprising part here for me, and we have this every year, is that any of the virtual qualitative, other than communities, setting those aside, virtual groups, virtual IDIs, continue to be fairly niche. They're not the go-to method right out of the gate, and that's always baffled me. So, what do you guys think? Why is the shift to online for qualitative just not happening at the same rate, even close to the same rate that we saw the shift to online for quant?
Well, that's a great question, and I guess maybe I'll quote Daniel Kahneman. People hate to lose 8 times more than they like to win. Qualitative research is by definition very complex, and so I think it's reasonable to think that it is more difficult to automate it. Whereas the quant survey, it's fairly structured. I think it's easier for people to get their heads around an online shift for quant, but maybe less so with qual. I kind of looked at this a little bit of a different way, Lenny, which was I expected to see a lot of fragmentation across these methodologies, which to me is an indication of where the industry is on the adoption curve of these alternatives to facility-based focus interviewing. So I'm actually fairly encouraged that this is much more fragmented than the quant slide. It basically is very encouraging to me that there are methodologies that are penetrating to some degree, probably on very particular types of investigations. That's certainly how we have been using them over time. Yet still, while we take bulletin board focus groups, I've been doing them since 2002, but we still do in facility focus groups because there's lots of behavioral psychology techniques, anthropological techniques that you can still get tremendous value out of in a face-to-face and facility methodology. So it still works.
Yeah, I get the value of obviously of traditional focus groups from that standpoint. What I don't get is the cost drivers and what on the client mindset from that standpoint. I mean, obviously, to your point, the shift towards automation on the quant side, that is almost purely a cost issue, right? I can do something for 20% of the cost that I used to do it during a full service project. Well, yeah, why the hell not would I do that? So is the part of the challenge on qual, certainly I agree we can't get to the automation piece entirely yet, but are we not at a place where the cost savings of utilizing a platform just like we're on right now, effectively, right, to do a group, where that outweighs the benefits of the face-to-face? Is that the barrier?
Yeah, in our experience, actually, the cost of the platforms in online, say, take, for example, doing an online focus interview with a physician in healthcare with a webcam, it's actually not cheaper over the course of the study than renting focus group facilities and traveling. That has a lot to do with pricing of those platforms.
But we have platforms like Microsoft Pulse that are free.
Well, I'm writing that one down.
Yeah, I mean, so I hear you, and I've done enough online groups myself that I recognize that that's probably true, that the cost differences are not significant, especially with recruiting, et cetera, and for B2B populations. Totally get that. But there are options like Microsoft Pulse, which is a free product to do online groups. And, a company the size of Microsoft has gotten behind that, and it certainly has a fairly high user base outside of traditional research, or else they wouldn't be doing it. But yet, in traditional research, we're not taking advantage of those type of tools to achieve the cost efficiencies in qual. And that continues to just baffle me. Pat, Leslie, any thoughts from you?
Well, we do a lot less qualitative work, so I'm going to probably save time and let Leslie comment. But I do think, from my experience overall, that there's certainly value to adding online qualitative through groups that help supplement some great quantitative data analysis that we do. So we tend to see that a lot, and I think there's still a lot of value there. I wasn't surprised that those were maybe in third and fourth there, but I do still see a lot of value there because they're often brought to us with quantitative custom research that we do. But I'll leave my comments there because this is not a big area for us.
Well, I was curious on the tech side. I've got to believe that Confirmant has at least looked at online qualitative as part of the capability set.
Yeah, I mean, I guess what I would say is that our platform is well set up to start to take advantage of some of the areas like social media analytics and text analytics, and we sort of see that maybe as other ways of getting at qual, but sure, we do see that as an opportunity because it's really difficult to scale traditional qual, right? So we've looked at other technology advances in the area of text analytics.
But let me come back to this. I mean, there's no doubt that we are using qualitative platforms, technology where we can deliver projects at a much cheaper rate than doing focus interviewing. So, whether it be recollective or, bulletin boards like iTracks and what, we've been using all of those for a long time. And they do generally come in significantly cheaper. The challenge, I think, is, but that makes it a bit of a different investigation. It's not like it's an easy conversion from, we used to do it that way, we're just doing it now in this environment. It's the same thing, only a different channel. It's actually a different kind of investigation, which then I go back to, to Kahneman's thing, right? For some clients, they're very happy to take the additional benefits that you get and are not worried about losing anything, whereas there are some other clients that are less willing to take a risk. So it's just the shape of the adoption curve for me.
Yeah, no, I get that. It just still seems slower. We haven't seen the survey qualitative emerge yet.
Yeah, absolutely.
There's something maybe try, Discuss.io, Remesh, their approach, even Invoke, maybe candidates to get there, but that game-changing method hasn't gotten full traction yet, hit critical mass.
Yeah.
We'll see where that goes.
Yeah.
Good news for facility owners. On that side. I'm sorry, Leslie, go ahead. What were you going to say?
Yeah, I mean, one thing that I was going to say is, down here in this list we have sort of in-store or shopping observations, and one thing that we're starting to hear from a lot of MR companies is they're trying to figure out kind of ahead of the curve, how do I get those qualitative insights around things like geolocation? What happens when someone goes into a store? How do we gain different kinds of insights? So we see MR companies now starting to think ahead and, how do I leverage technology to capture these things, to deliver those insights in an automated way that's qualitative in nature.
Yeah, more than mobile ethnography. Yeah, that we track that in kind of the emerging methods, which we talked about in the last webinar, and certainly we're seeing good steady growth of adoption there as well. So I agree with you on that. All right, let's move on to something that's potentially more interesting, and that is hiring plans. And actually, there's two slides that we've seen here. One is we asked a question about what types of profiles folks are going to hire for. And then on the flip side, we're looking for training. And there's a lot of congruence between the training needs and the resources, finding the story and the data and data visualization skills. Well, that's also designers and data visualization experts kind of at the top of the list. So So that's good news that the industry both recognizes that we have some real gaps in terms of our traditional skill set, and we're trying to deal with that on both a hiring and a training perspective. The question is really, is it too little too late? Particularly with some of these categories, data scientists, social media experts, marketing or business strategists. These are the realms of other industries than research that hire these folks as well. So are we just trying to be me too, or do we have a clear vision on how these roles can fit within the research organization to deliver real value in what we do? So, Pat, what do you think about that?
Yeah, I know since taking over Simmons, one of the key areas that we introduced was a measurement science or data science, but a little more specific to actual data collection and survey design, along with being able to model data and integrate data together. So I use a different term, but a key area for hiring for us that I really saw as us playing catch up. And I agree with your comments that these folks tend to be trained, especially modelers, in other areas. So one area of concern for MR is competing for those skill sets. We have trouble bringing in good people and keeping them, because there are great opportunities these days for data scientists, both for buyers and providers and across different verticals. However, I think there's a unique place for data scientists in our industry, because they need to really understand, in our case, it's more consumer and media, but for them to really understand contextually what they're working on and tell a different story. They're not just bringing data together. We are definitely, I look at it more from an econometrician's perspective, where you have a theory about what's happening and then you build quantitative models around that, as opposed to let's just dig through some data. That tends to be the type of measurement scientists we're looking for, and also the type of measurement scientists that we train. So I think there's a very unique contribution to that area from our industry. But an issue is competing for people with those skill sets, because they have to be able to write code. They need to understand enough about modeling and model building and survey design to understand what strengths and weaknesses, et cetera. So, sorry, that was kind of a long comment, but I think that's a key one from my perspective. Yeah,
no, I agree. How do we compete against, let's say, Facebook or Google or some of those companies, IBM on the data science front? That's a real challenge. Now, John, so you guys have always been more on the consultative side and focused on delivering insights in a different way. So thinking about where you've been and where you're going, how does this mesh up?
Well, it meshes up very well. I mean, it is absolutely the kind of thing that we've been pushing for, through our own business, which is a shift of market research from being an art, and a craft skill, to being a science. And we have a real interest in the industry getting there. And to me, this is really encouraging to see both buyers and providers are upping the game, becoming better, and for us, that offers the promise of evidence-based decision making. Less about opinion, less about what we've seen in our past work careers, all that kind of consulting stuff. It's consulting based on evidence, and these kinds of disciplines help make sense of complex data and make it digestible for clients. So for me, it's very encouraging, and it is the direction that I want to see the industry go. That'll keep the return on investment of market research high, and will prevent budgets from getting cut because it's not delivering.
Leslie, I'm willing to bet that as folks are, you get a lot of requests for help from a talent standpoint, even though you don't necessarily provide that help, right? Can you tell us, somebody, a good data scientist, or can you tell us a good programmer, whatever the case may be? Are you getting requests like this as well? Are folks coming to you and saying, "Hey, we need somebody that can help us take the data and make it more visual"? Or
yeah, Yeah, so I think probably the thing that we see the most is, market research companies coming to us and saying, we're really being forced to deliver better, faster reporting, and we're challenged to tell the story in the data. We need dashboards. We need updated reporting. And so I kind of saw a close link between, designers and data visualization experts and experts in the technology as really being hand in hand. And here you talk about the technology around data collection, but that's closely linked with being able to then report on that data in an automated and efficient way where, you can quickly put together an executive summary report for someone in the C-suite all the way down to a very detailed report with all of the insights and all of the findings for, a market research team at an enterprise company. So, I think probably the most often thing that we hear is we need people that can not only create the story out of the data, but I need to visualize that really well for my client. I need dashboards. I need quick response. And I need the tools and the people who can use the technology to do those things. That's probably what we see the most.
Okay. Yeah, I think that's right. Just a reminder to those that are watching, if you can submit any questions that you have, we'll try and weave those into the conversation. So,
hey, Lenny, before we leave this page, there is one other more qualitative insight out of this line, which is the projected decline of moderators and field interviewers, while hiring plans for marketing or business strategists is kind of the number 3 on the list here. Whether it be quantitative data or qualitative data, what's very clear is that the need to make sense of data is universal, and I think it's an important signal that the day of hanging out a shingle because you can do some focus groups is long over.
I think you're right, and also the experts in technologies of data collection certainly not necessarily high on anybody's list. So, the skill sets. If we kind of think about this as the researcher of the future, those skill sets look different than probably what we've traditionally hired for. If we go back to this and look at again, project planning at the very bottom of the list of training needs, right? Consulting skills are up there, aligning business needs to research needs. All of these either very specific things like visualization or more general business consulting. So as we think about the future, and folks want to make sure they have a role in the market research industry, then this tells me that moderators and project managers and those folks probably need to get some additional training themselves so they continue to be valuable while their skills are still in demand.
Yep.
All right, let's go into the economic outlook. So we asked both buyers and sellers, clients and suppliers, about their spending or their revenue projection for the next year. And there's a pretty interesting disparity where we ask about clients on their spending, 45% expected to increase, but yet suppliers, 75% expect an increase in revenue. So that's slicing that pie pretty darn thin to get there. And also, on the flip side, 19% of clients expected a decrease in their spending, with only 5% of suppliers expected a decrease. So before we get into the other pieces on here, which is we ask people, why and what were they going to do about it, just off-the-cuff reactions to this apparent disparity in expectations for the year. Leslie, what about you?
Yeah, I mean, I don't think that these, I think when I think about what suppliers think through, they think, how do I innovate? How do I come up with some new technologies or new ways of doing things that'll be appealing to that end client? I think with the rise of the whole idea behind agile market research, right? Can I do a lot more with a lot less budget? Can I respond? Can I get results really quickly? Can I get them really inexpensively? Sort of the first thing that we see is market research companies in our industry responding with, how do I create a new product offering? How do I come up with something innovative to deliver back, sort of in response to that, so that I can continue to grow.
Yeah. And by far, if we go ahead and look at the, why is there going to be a decline? Of course, budget, cheaper, lower cost techniques, they're right there at the top. With budget obviously being overwhelmingly the larger issue. So, John, how about you?
Well, on this economic outlook, quite honestly, Lenny, I think it's very optimistic. So I'll quote our behavioral psychologists who will say human beings are generally too optimistic when they answer these kinds of questions in surveys. I think the number of clients that are going to have smaller budgets is much higher than 19%. But if even if we kind of downgraded this a little bit, it at least looks like there's a stable marketplace for market research. Even though anecdotally, I think there's lots of suggestions that suggest that it might even be shrinking. But yeah, I think the suppliers are hope springs eternal.
Right, that's right. So, Pat, how about you? Especially your business is a little bit different since you've got the the syndicated component as well. So, what's your take?
Yeah, we have a syndicated component, but we are similarly optimistic. And one reason I'll say that, I mean, if you believe that you are doing things better than your competition, then you think, you've got another year to maybe take some market share. So I think everyone's looking at themselves in a bit of a silo here. So it's not saying there's going to be more spending. Well, I think that's what the question asked, but I'm not sure if that's what all the respondents said. So for me, internally, I look at it as though I think there's going to be more money that we can win away from competitors. So it doesn't mean the pie in the industry is getting bigger. So I think that might be a little bit of a disconnect in the question. But also, I think if you treat your clients as partners and really make sure to convince them of ROI or help them convince the C-suite and folks who are writing the checks of the value they get in research and maintaining both syndicated and custom research, in many cases at a very high level. And even when we've seen it drift for a year, we've watched it come back because they do see the value. So if you could create those partnerships, it is a very stable area for market research, and it's also potentially a growth area. It tended to be that when things looked bad, that you looked at your marketing budget, which often included market research, and cut it. And we were hoping that through long-term partnerships and seeing value in what we do, that we don't become the first thing that is cut. And I think we've won some of those battles. Certainly in my area, I believe that we have, so there's a lot of stability there. Growth is the tough part, but we are eternally optimistic about growing this year.
Yeah, so that actually makes me think that there's other parts of the business on my end that we don't talk about that much, but it's probably even relevant here to think about. So, Gen 2 Advisors, our consulting company, does four basic things. We help client-side organizations find new suppliers. We advise startups. We consult with existing supplier companies, and we do M&A work. So actually, I hadn't thought about it until right this second, but if we think about, for me, the past 6 months has seen an uptick in all of those things, meaning that a lot of clients are looking for different solutions than they currently have. Sometimes that's driven by cost and speed, right? They want the cheaper, faster solutions. But other times it's not. They're looking for more impact. Budget's not really the issue. They just are tired of getting the same stuff from the same people that they've always gotten. There's certainly more and more startups that are entering in the industry and are achieving some traction. And there's a significant amount of M&A activity happening right now, particularly around consolidation driven by private equity. Which all those things tell me that the industry is still healthy. As you said, there's still a pretty big pie for us to use. And when I think about this budget question, I wonder how much of that isn't that it's declining, but rather it's just shifting into other areas that research now has to compete with we hadn't thought about previously, particularly startups that don't think of themselves as research companies but are addressing some of the research challenges that are coming on board. So interesting time across the board in 2017 if we think about this continual push of new companies coming in, clients paying attention to them, and the private equity groups coming in and throwing money to consolidate the industry into kind of larger macro players, and seeing where that growth can come from. So,
Lenny, just if I could just build on that, Lenny, it's John. We had a call from a client just the other day that echoes exactly what you're talking about. Their need to reach out to us was based on, they had a particular property that they're trying to reinvigorate, and they've been through every kind of traditional method you can imagine, and are just either getting answers that don't make sense, like they can't possibly be the solution they're looking for a breakout, growth of this business. They're specifically looking for a different answer, and so they come looking for different kinds of methodologies. Go back to the fragmentation of the different solutions that are getting used. This is the kind of thing that is happening more often. So they are coming to the companies that, through Greenbook and IEX, you guys have done a great job in creating opportunities for.
Thank you for that plug, John. The check is in the mail. I appreciate that. Yeah. All right. So overall, the economic outlook looks maybe overly optimistic, but there's cause for optimism one way or the other for most companies. Is that our key takeaway?
Yeah.
Yep.
Yeah, I think so.
All right. So there's a whole new section in this wave of grit where we wanted to kind of get inside the minds of clients and try to understand what was really important to them. So there were a few questions that we asked that we put on this slide just to save time, even though it didn't necessarily, or space, even though it didn't look that great. First, we asked clients about the proportion of their work that is strategic in focus versus tactical in focus today, and what they expected in 3 years. So interesting that the bulk of what they do does not necessarily appear to be strategic. It does appear to be more tactical. And as we look at the 3 years from now, that changes some, but not necessarily a game changer. Then connected to that, we asked whether they consider themselves innovative. And as we can see, that they just score themselves that way. And certainly the vast majority consider themselves just moderately innovative, followed by a few that consider themselves high innovation. And then third, we asked about the proportion of insourcing versus outsourcing, and some pretty large numbers in terms of the proportion that is being insourced versus outsourced. So I think there's a story in all three of these connected, that folks are more tactically focused than strategically. Innovation is not necessarily a core element of their organization, and they're outsourcing to get that while they do the more tactical blocking and tackling stuff internally. That's the story that pops out at me. Am I interpreting this correctly? What do you guys think? John, let's start with you.
Well, I think that, assuming that I'm reading that very first chart correctly, that there's a shift towards strategic in the future, which will drive clients to be more innovative. And then ultimately, the whole story for me around what's being pulled in-house is very likely the more tactical, more routine, more automatable work, with a few exceptions. But that's good for the consultative companies out there like ourselves, in that dollars will get freed up to do that sophisticated work, to be able to find big breakout, growth opportunities, which will come from innovative solutions. So it's an interesting story. It's interesting to see, the buyer cohort kind of recognizing that.
Okay. All right, Leslie, what do you think?
Yeah, I would agree with that. I mean, I think we do see clients bringing technology in-house to sort of automate some of the basic, more tactical functions of the research process. I think where the real value is can you do that in an efficient, automated way so that you free up people time either internally or externally to get to the strategy and to get to the insights and to bring those up and throughout an organization. So I think it's good for clients, and I think it's good for the MR industry that is servicing those clients.
Are you seeing more clients coming to you for licensing for the conferment?
We have some clients that have come to us for licensing. I think that, we have a voice of the customer business and a voice of the employee business, where we see that the most. I think for our market research clients, I think the client DIY story is a good one because they still need to rely on their consultative partners to interpret that data and to help cull those insights, right? And so I think it's a positive for the industry that for the clients that do bring that component in-house, they still have that opportunity to rely on their market research partners for that strategy piece. So I think it's a positive.
Pat, how about you? What do you think of the story here?
Definitely seeing more data science in-house. So as we work with many of our existing clients on more custom projects that involve data integrations, data activation, that they have an in-house team now, or that they've recruited people who essentially could work for us. And now we've got a conversation between our measurement science people and their data science people. And I think that's good. Otherwise, they wouldn't see the value in what they're buying. They hear the buzzwords. They know there's data out there. They do need that expertise in-house. It actually creates opportunity for companies like ours and others in this space. So I am seeing it. The numbers look about right on those charts in that, there might be one person or two, and they're part of a team that's been reassembled from other teams. But there's definitely some investment, and it tends to be, I see it in a data science area.
That's interesting. As we see, it kind of goes back to what Leslie said as well. We've done a lot of work this past year to identify the proportion of service need that the pure technology platforms still have. And kind of the general thing we've heard is even across the board with the DIY platforms, Qualtrics, SurveyMonkey, et cetera, that about 30% of all of the work that is running through them still requires some service capability, which they don't deliver on. So I think that's an interesting thought that this insourcing number here may actually not be fully accurate because there is at least a subset or a whole other piece that we're not even capturing that is a hybrid of the two. There may be the data collection or the field management is being brought in-house, but there's still a substantive component that requires some type of consultative support. So that's interesting to factor in here. All right, so we've got a whole other series of questions that were kind of follow-ups on this, or at least part of this series of questions around the client. And it's probably best to kind of talk about these together. So I'm going to run through these three slides really quickly, and then we'll talk about them en masse. First, we asked a client wish list, meaning the things that they wish they could have within their organization today. And you can see some of the comments we pulled out requiring that they now require actionable, non-aspirational reports, It has to move the business. They want to understand return on investment, great input from the C-suite, look at business people, not researchers. Definitely an overall theme here that they want research to be more rigorous, more tied to business outcomes, and have their roles be reflective of that, and more deeply engaged with the C-suite. Then keep that in mind, kind of their needs. Then we asked two other interesting questions. First was, we asked them how satisfied are they with both the strategic and the tactical aspects of working with suppliers. And ideas of strategic were understanding my business, being consultative. Tactical were, programming, data collection, management, et cetera, et cetera. And this is a quadrant analysis that Jeffrey Henning did, which shows kind of where that wound up, where suppliers have some definite weaknesses when it comes to all those things we already talked about around hiring and training, being consultative, and we have some real vulnerabilities around data visualization and cost, particularly cost from due to automation, but we're really good at conducting research and handling those aspects, those tactical aspects of the research. Then we asked suppliers what they thought clients thought of them. And not some huge differences, but a few things. They definitely identified that they weren't very consultative. They added timeliness as a vulnerability here. So overall, when I look at these three slides, one, I think suppliers have a pretty good sense of where their challenges lie. But we do have some very distinct challenges as an industry, according to clients, in stepping up and helping them to achieve their goals in their wish list, to be more consultative, to tie it to ROI, to be more engaged with the C-suite. We don't seem to be getting high marks on helping to achieve that. So, Pat, what do you think? Is the prescription to solve that, those things we saw earlier around training and hiring, or is there something more systemic that must change in our industry to be able to adapt?
I think we are doing the right things, but I feel like, this is the Simmons Perspective here, so I keep that in mind. We have to invest, and this is a big year of investment in our infrastructure, because we've heard many of these things. Timeliness of getting your results out, constantly being asked about our capabilities with survey and questionnaire design, so we've really ramped up in hiring in those areas. We have a measurements chief scientist and measurement science people and data science people. As I said, well over $1 million in infrastructure design. We work with the Confirma people very closely as well. So there are things that I think the industry is addressing if we want to be more competitive, and a huge value to our clients, because they do see us as kind of weak in the areas of survey and questionnaire design, which that's one of our specialties. That's what we do in a syndicated way at Simmons. So I think that while we've responded as quickly as possible, I think that it does maybe show that the rest of the industry has to respond as well. So I think that's a good thing. Hiring the right type of people and promoting that type of skill set and doing some training in-house with that skill set will definitely help us as well. Because I definitely want to see a chart like this in a year or so with some shifts in those quadrants so that we are relied upon in terms of knowing how to interpret data and actually then, being able to tell a story that meets the research needs of the company. We have many clients who are in the same vertical, but they have very different needs. And so you can't have a solution that is really designed around the same, one or two types of business outcomes. And even in the media world, where you'd think they'd be very similar, they have very different strategies, which means you have to bring a completely different approach to each individual media company. And we need to make sure that as an industry, we're ready to step up and solve those issues, so that overall our reputation is that we are the consultative source for market research.
Yeah, but are we? I hear you. I agree with everything you said, Pat. But you think about when there's companies like McKinsey that is launching a research offering, or Deloitte that has a research offering, or even the tech companies like Google or Facebook, which have consultative research offerings as well. How do we compete with them? How do we compete between this convergence of the large technology companies that arguably can offer cheaper, faster, better data, at least in some cases, certainly not in all, combined with the strategy consultancies, the business consultancies that are also moving into our turf? John, what do you think?
Well, I'll tell you that these 3 pages are the ones that got the most emotional reaction from me because, quite frankly, the one you have on the screen right now, page 11, I've been trading on this fact since 2002 in this industry. I know the industry has these weaknesses, and they are the things that our organization solves. Absolutely, this makes sense to me. What distresses me is the budget constraints that are happening in the marketplace, and with procurement getting involved in market research. I've yet to find a procurement department that bothers to talk about this stuff while they're trying to work out some kind of loyalty program, with their research vendors. And I struggle with that. I struggle sometimes where clients complain about these issues that have been long-standing issues, yet worry about a 10% premium for a vendor that does a terrific job at this stuff, versus a 10% discount they might get from a vendor that's, continues to perpetuate these problems, but they're budget friendly. To some degree, you get what you pay for, and if these are real needs, then I get a little bit upset when there's great firms out there that are being held outside organizations. But to get to your question around McKinsey and Deloitte, the only way that we actually can compete with that offering is through integration, which is something that we've been pushing for many years, and it comes back to the root of this issue that's being identified here as a career researcher that has done nothing in their career other than do research will really struggle. It takes a long, long time for them to even have the ability to understand clients' business and act as a business consultant. It typically comes from people with a different skill set, and we have very purposely gone out and hired people who are right out of marketing, like myself, how I got into the industry. People have advertising experience, then some academic skills like PhDs in behavioral psychology, cognitive psychology, anthropology, even journalists, and you bring these people together with the ability to integrate thinking, you get tremendous impact. I'm not so worried about McKinsey and Deloitte because I know that large organizations struggle to actually execute. I'd put our company up against any of those any day.
You may think about went to the Arif Rethink conference, I don't know, 7 years ago, maybe not quite that long ago, and Stan from Coke was moderating a discussion with Joan Lewis from P&G, Eric Salama from Kantar, and somebody else. And they were talking about this very issue of the consultant component. And the essence was that Joan was going on of we need people to step up and do this and offer these things, and that sounded disparaging towards Joan. I didn't mean it that way. Joan's fantastic, but she was sharing this point of view from the client. And then Eric from Kantar said, "Well, are you going to pay us that way? Are you going to pay us consultants?" And if I recall correctly, Stan busted out laughing, and Joan didn't have a response. So that does kind of get to the meat of this particular issue as well. To your point around procurement, right? The automation and DIY and those tools do allow the widgetization, if you will, of research, right? We can look at unit cost and do that. Strategic research, not necessarily. Leslie, what do you think? you're obviously a technology provider, so you don't get too much into this piece of things. But again, thinking about your arguably very large view of the industry as a whole through all of your relationships and clients, is there anything surprising here or anything that you're hearing that's any different? Or, what's your take?
Yeah, I think, not too much surprise here. I think there's sort of been most of the MR companies that we talk to either feel a frantic need to catch up in the area of data visualization because they're getting that client pressure, to create those dashboards and, deliver good reporting that comes together in a widgetized way, if you will. So we spend a lot of time not only with MR companies helping them create those reports and create that infrastructure to be able to deliver against client expectation, but then really to take it to the next level, right? To if you've executed 50 market research studies for a brand owner across a number of years, do you have the infrastructure in place to then pull out some of those insights, looking across a broad body of data and being able to kind of get more into the area of specialized analytics and things like that. So I would say we see a broad spectrum of MR companies that know that they need to play catch up and are sort of frantic to build those dashboards to kind of that next stage. Well, we've got these deliverables, we've got these things created to visualize data for clients. Now we need to be more consultative, to get a seat at a strategic seat at the table.
Okay. So we weren't sure we were going to have time to get to. Whoops, I'm going backwards. To get to this last slide, but I think we do have time. So let's cue this up. The importance of information channels. This was a little self-serving for Greenbook, so we own that. But we asked questions about how important these channels were to both clients and suppliers. Seminars, conferences, webinars, all the way down to blogs and Twitter. And when we were talking about this before, we all kind of thought, this is pretty cool because it really is almost the outline of where your marketing spend should go if you are if you're a supplier. So let's cue this up just for a minute as we wrap up and do a quick round robin. Let's start with you. Anything that jumps out at here that was particularly interesting for you?
Yeah, I think, the seminars and conferences, I think, are a great way for MR companies to come up to speed, right, on, what are the new emerging technologies out there. We've been hearing about things like gamification for a long time. And I think for me, the GRIT report was really interesting this year just to see, well, at what point do some of these things that you hear about for a number of years at conferences and seminars, at what point do they become more mainstream, right? But I think a lot of the newer methodologies and the more innovative approaches really do come from people spending time together at conferences and seminars.
Yeah, particularly IAX, right?
Yes, absolutely.
Sorry, I couldn't resist. Pat, anything that jumps out at you on this?
Yeah, I liked the face-to-face business networking component there. I think for us, a client-first strategy where we are with our clients regularly and trying to have a lot of face-to-face meetings is the key for our information exchange, and I think that's going to be true in the industry. Also, thought that the industry print journals are way down there where they're only ranked above the social networking components. So I wasn't really sure what that meant. But we're also very busy that when we do have an innovative method or methodology, are we all going to sit and write those out and publish them and have them peer reviewed when we can go out and do some face-to-face presentations at a high level and or at a high ranking level and make sure they get our methodologies used. So this says something about where we're going and how we're going to disseminate findings in the future. Those are the two things that stuck out with me.
It does. In a world of virtual, it sure is the non-virtual stuff that kind of rose to the top here, right? At least it's strong in proportion. Obviously, webinars are important, websites, but face-to-face conferences, they were a big deal. So that is interesting. And thank you for pointing out. I don't know how I missed that blogs ranked over industry print journals. So on behalf of Greenbook Blog, we appreciate that as well. That obviously we make some difference. John, wrap us up. Anything that you had on this?
Well, for me, the thing that stands out like a sore thumb is social networking, Facebook, Google+, and Twitter down the very bottom, which to me just highlights the fact that our clients are far too busy to read this stuff. Oh, and by the way, so are we. So, as far as where we put our effort, people's time is very valuable, and maybe we should be de-emphasizing that a little bit in favor of face-to-face meetings that can build trust. That's what the industry is all about.
I think you're absolutely right. So we are at 2:01. Thank you to our illustrious panel. Thank you to everybody who was on. The GRIT report will be released next week. I said Tuesday because that's the current schedule. Don't hold me to it. Could be Wednesday, Thursday. But it is coming out next week. It's awesome. You're going to love it. We'll send lots of things out on Twitter and social media that won't get looked at or paid attention to. As well as direct email to everybody so you can download it. Thanks, everybody. Appreciate it. Have a great day. Bye-bye.
Thank you.
Bye-bye.